Prior to the 90s, central banks used to hold a lot of gold as a share of central bank reserves. Why has it gone down so much? Well, there's two reasons why. One is because they've issued so much fiat currency, so many out of thin air reserves, that the proportion of the gold they hold has become a lot less, as you can see. But also because a lot of them have sold their gold because they didn't think they needed it anymore. But I think that's gonna go back to how it used to be many decades ago. And that's why the emerging markets or the BRICS or Global South central banks are buying so much gold. They know what's coming.
Gold prices were higher in early U.S. trading Tuesday as the yellow metal's overall technical posture remained bullish. The rising purchases of gold by central banks are an essential factor justifying the recent increase in demand for the precious metal. Central banks, especially in China and India, are trying to reduce their dependence on the dollar or the euro to diversify their reserves. MarioInnecco, a prominent figure at Gold Investments Limited, notes that central banks' gold reserves have fallen over time due to fiat currency issuance and gold sales, but believes this trend is reversing. Emerging markets and BRICS countries increasingly buy gold, anticipating future economic challenges. Based on observation, Innecco emphasizes that history shows gold always regains importance, and believes a return to gold is inevitable as foreigners lose faith in the currency. According to the International Monetary Fund, the dollar's share as a global reserve was 62% in 2010, 59% in 2020, and 58.41% in 2023. Though the dollar's importance is decreasing, it remains the world's most preferred currency. From a technical perspective, Innecco believes that gold's intrinsic value and stability make it crucial, especially recognized by Dutch central bankers. If a new currency needs to be created, or a systemic risk arises, the public can trust the central bank's gold reserves to back the value of the new money. Goldman Sachs said it remains bullish on gold in a note on Monday, citing potential Fed rate cuts and China's unwavering demand as key drivers, which have helped push gold prices to record highs. This positive outlook comes despite rising U.S. interest rates, which usually tend to lower gold prices. Moreover, MarioInnecco highlights Jerome Blockland's observation that 1/3 of the 51 central banks surveyed by Invesco for their annual Global Sovereign Asset Management Study Plan to increase their gold holdings in the next 3 years. Now, we present the clips of MarioInnecco's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
If there is political chaos in a country like we're seeing now in the United States, foreigners are, and they already are, losing faith and confidence, but this is going to even accelerate it. They're going to lose faith and confidence in that currency. And not just foreigners, also Americans are going to start losing it. And that's why I think we're very close to some kind of currency collapse, hyperinflationary event. I don't know what's going to kick it off. It could be tomorrow, next week, in a month's time. It could be in a year. But I think we're really close. And what will come after that? Well, usually gold comes back. It came back when Napoleon took over after the revolutionary mess, the assignats and the mandats. They were currencies that hyperinflated, and he reinstated a new currency, the gold franc. It came back in Germany as well. They had to go back to sound money after 1923. They did the same thing in the United States after the continental dollar. They eventually got on gold and silver as money, and it happens every time. And if you don't believe me, if you think I'm making this up, even the central bankers know it. I think it was last year, one of the Dutch central bankers, he gave an interview to Dutch national TV, and he said, the beauty of gold is that it's stable in value, it retains its value. That's one of the reasons why central banks hold gold. Gold has intrinsic value, unlike a dollar. By that he means a Federal Reserve note or any other currency, let alone Bitcoin. Gold has value on its own. It's a fungible product. It's a liquid product. You can buy and sell it almost anywhere in the world. So it's really an outstanding commodity to base an exchange rate system, gold standard, on. And then he went on to say, well, I think once you let go of tying your exchange rate to gold, then one of the main reasons for holding gold is gone. Then you might ask, why are we still holding the gold? Why gold and not a portfolio of stocks or bonds or something else? There are a number of things that make gold very attractive to central banks. Gold is like solidified confidence for the central bank. It's something that has historically fulfilled that role. If we ever unexpectedly have to create a new currency or a systemic risk arises, the public can have confidence in DNB, that's the Dutch National Bank, because whatever money we issue, we can back it with the same value in gold. So there you go. It's the last resort. And I saw an interesting post yesterday about the fact that central banks are looking to increase their gold reserves. You can see here. Jerome Blockland says 1/3 of 51 central banks surveyed by Invesco for their annual Global Sovereign Asset Management study aims to increase its gold holdings in the coming 3 years. No central bank is considering selling gold. And you can see here that prior to the 90s, central banks used to hold a lot of gold as a share of central bank reserves. Why has it gone down so much? Well, there's two reasons why. One is because they've issued so much fiat currency, so many out of thin air reserves, that the proportion of the gold they hold has become a lot less, as you can see. But also because a lot of them have sold their gold because they didn't think they needed it anymore. But I think that's going to go back to how it used to be many decades ago.
Regarding recent Elon Musk's tweet about America's financial situation, predicting that the U.S. national debt will soar to $1.4 trillion this year, consuming 76% of all income taxes collected. He warns that failure to act could lead to severe financial instability and suggests investing in gold and silver as a protective measure. The IMF, which usually focuses its messages on developing countries, urges the United States to urgently address its mounting fiscal burden and predicts that the debt-GDP ratio will hit 140% by 2032. Fiscal deficits have been chronic in the United States since the mid-1970s, except for a brief hiatus under President Bill Clinton at the turn of the century. They have grown increasingly larger since the financial crisis, the Trump tax cuts, and the pandemic. Consequently, Innecco mentions the potential for hyperinflation is high, as even increased currency printing may not restore confidence. He underscores the importance of investing in tangible assets like gold and silver for protection against currency collapse. Let's get back to the interview.
Well, Elon Musk, I'm not a fan, I'm not against, I'm neutral. He tweeted yesterday, America's going bankrupt, by the way. And he retweeted or reposted something about interest payments. And it says, on U.S. national debt will shatter $1.14 trillion this year, eating 76% of all income taxes collected. Why is this happening? Well, it's happening because the deficit spending has been out of control, even in a supposed period where the economy is doing great or is the best in the world, as we heard from President Trump, as we've heard from President Biden in his announcement or letter. He said it was the greatest economy a couple of days ago. So how come they have to keep deficit spending? Well, because it's not a great economy, and because, as Alan Greenspan said many years ago, we just print and print and print, but there comes a point where you break the camel's back. And the U.S. the U.S. has already gone bankrupt. It wasn't known politically as the United States, but it was during the Articles of Confederation period. The continental dollar went the way of the Reichsmark. And yes, countries can go bankrupt. And the U.S., I would say, has been defaulting for many, many decades. And how do they do that? Well, they just print the currency, and the people who hold the currency, they get screwed because that currency becomes worth less and less. And it's happening here in the UK as well. But there comes a point where not even printing the currency will help, because the currency will, people will lose complete faith and confidence. And I think this could be very significant, the fact that Elon Musk is talking about it, because X or Twitter has huge following, and this is it's coming into the public conscience. It's something that is very unusual and very few people understand, and it can happen overnight. Is the loss of faith and confidence in the currency, and it only takes one event for that to happen. And during Weimar Germany and also revolutionary France in the 1790s, they experienced the same thing. And what we're going through today fits the bill. So how do you protect yourself? Well, I think Elon Musk, through another post, gave people a huge hint. So Elon Musk posted yesterday, where are we with the dollar value destruction, you might ask. So he put at number one, he put a silver dollar like this, which used to be the money that people used to use, and gold as well, but he used silver. And then he put a silver certificate, which is just a currency promising you to pay one of these. So up until then, everything was fine. But then with the creation of the Federal Reserve, the dollar is really gone. The real dollar is really gone, because the Federal Reserve note is an imposter. There's nothing behind it. And then he put a Zimbabwe $50 trillion banknote there, and he said we're right between the fiat dollar and the Zimbabwe dollar. And then he puts a bullet, a lead bullet, number 5. So why the bullet? Well, because when the currency collapses, society, the market stops functioning. I reposted that, and I said the first time I saw Elon Musk refer to silver, necessity will take us back to number 1. Yes, it will. And that's why I've been stacking silver and gold since 2002.
Goldman Sachs underscores the significance of central bank gold purchases, which have tripled since mid-2022. We still see very significant value in long gold positions and maintain our bullish $2,700 forecast, a 12% increase over current spot prices, for 2025, they added. How do you think the ongoing shifts in central bank gold reserves will impact global economic stability in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.